Ira Epstein of Linn Associates with your morning flash update for this Thursday, and we're at the 3rd of February, 2022. Well, it's an interesting morning. We've heard Mr. Bailey, the governor of the Bank of England. We're hearing Miss Lagarde. She's still on. She will finish up her news conference probably in about a minute or two. That's why I'm coming on now. President Biden's going to be on in a moment, and it appears that the U.S. Issued a strike in Syria and took out the head of ISIS there, so he'll be talking about that. Getting on to the banks, it's interesting. The Bank of England raises rates by a quarter point, and there was a battle. Out of 9 voting members, 4 wanted to go to a 50 basis point hike, and the European Central Bank holds interest rates, and actually they're going to do more buying in the second quarter of certain bonds. The complete difference. Ms. Lagarde is doing her best and doing a good job of explaining what she perceives and what the bank there perceives as the difference between the UK economy and that of the Eurozone. Part of it has to do with employment and Brexit and a mass exodus, she said it, that the stats bear it up, of employment and people leaving for jobs in other areas, could be the EU. Dollar down a little bit today, and we are looking at a big washout again. Now, I know you'll say, hey, why is that occurring? And Facebook is certainly one of the main reasons that this happened. The Meta, if you will, stock took it on the chin. They, for the first time, are losing subscribers, I think, since their inception. And that is an important event. But more important to me is where the markets went up to. They went up to the 18-day average of closes. It was a bounce of anywhere from 30 to 50% in many of the indices, and they failed on the first challenge. That is not uncommon. We're back down a little bit in the energy markets. Bonds and notes are gaining right now in momentum. You're looking at corn and soybeans down. Does this mean weather improvement in South America? It just might. So when we look at the news, as I said, President Biden, that the U.S. took out the head of ISIS. He'll be able to explain that better than I can. The Challenger reports, the Challenger grade, the January U.S. planned job cuts, 19,000, about in line with what they were last month in December. U.S. quarterly preliminary non-farm productivity. Had it not been for Facebook, I wonder how the market would look at this, because labor costs nowhere up as much as the market expected. And you can see what's going on here. Productivity's picking up with the people that you have. Jobless claims, another better beat, down 23,000. They were looking for 245. They got 280. Jobless claims, as you can see, down 44,000. We're going to get at 8:45, about 10 minutes from now, the market group, their January service sector PMI. And, of course, you've got the 2 banks that have released what they're doing, and very different, a 180-degree difference in how the 2 central banks perceive what is going on. Obviously, the U.S. is joining with the Bank of England, and we're going to be raising rates from everything we're seeing come March. But the European Central Bank, sounds to me, if you listen to her, they're not going anywhere this year. You know, one of the things you heard me say just a moment ago was how the markets rallied up to key points and what happens. If you don't understand charting the way that I do, or if you like to learn what I know, you might want to go to our website under the keyword education. It's www.iraepstein.com. Can't make it any easier than that. Go to the word education. All my courses are there. I'm Ira. You have a good day. I will talk to you all tomorrow.